Okay, so gap ups and gap downs happen all the time, and to fill the gap, all it really means is if this thing gaps up boop, from what it did from 251.92 all the way up to 254.83, which means at some point in the future this will come down and connect with this candle, so at 251.92. And once that happens, more buyers will come in. It will keep skyrocketing. And depending on news and the market, it will see how fast that happens. That could just gap up and continue going, and I have a lot of examples of that happening. For instance, the spiders, we gapped up on 523, which is May 23rd of this year, and we just last week filled that gap. So we jumped up, and one of my indicators down here is this from goes from red to green, which meant this was very bullish as momentum continued up, right? Also on that day we had a MACD crossover, which is very bullish. So we had all of these things going. So it's like, okay, so that broke out and there's no reason to get short. So that just kept going. You just ride that up. And here we can see momentum go and you go, oh my gosh, what's going to happen? But then it just kept going and going and going. And so you see all these little gaps here. So we gapped up, right? So this gap lasted 2 days, right? Boom, gap up, came back down, filled that gap right there, and then we dropped, gapped up. Second day up the gap, we came back down and filled it. Gapped up, 1, 2, 3, gap down, filled that gap, 1, 2, 3, then gap down. We haven't filled this gap yet, so 195.80. So that's actually my next target of where I'm going to short the market at that gap, because then we have more gaps down here. We just formed a gap today. We gapped up, boop, and look at this huge candle. This candle came screaming up, and actually the market's been falling ever since we opened. We went high, we hit all these moving averages, and now we've come down, right? So this could close that gap, 193.37, which would be pretty bullish actually if it did, I think. Um, I know a lot of people are thinking this market's going to fall over, but again, it all depends on the Fed or Reserve and all that jazz. So, so I'm kind of waiting to see what's going to happen. Actually, one of my SPY trades is getting flip-flopped around. It's actually going against me now, I think. SPY, not in this account. So my little Tesla is doing well. I'm up 77.50 in that. But so going back over to Tesla, um, I was just running some math on your stuff. You picked up your first shares at 5,080. You picked up your second ones at 6,600. Your average right now is 5,840. And if you picked up another 50 shares at 260, that would be 13,000 plus your original 11,680, which would come out to 2,468. Now, why did I do that? Well, because you like Tesla, and if Tesla is anything like T is for me, I have, T. This is my covered call thing. Check out this gap up. Boom, huge gap up. Opened up here, and then it just started falling, 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 and didn't find a bottom till all the way down here. So I actually bought in T here, and I couldn't get out because of stupid regulation T crap in a pension account. So I just sold covered calls on that and collected some money as my value went down, but I collected money on calls as this went down. So if Tesla is something you're gonna be long in, long-term investment, I would suggest selling covered calls in it when you think it's going to go down. And with a weak market, I mean, really, who knows when this thing's gonna turn over and start falling? It could be, sooner or later. right now I'm still bullish on this. Um, with my little things right here, these little green dots, you know, that MACD crossed over. We have momentum building to the upside, and there are usually 8 of these in a row, boom, 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 that go up. So that's the weekly chart, and that's the daily chart right here. So on the daily, we're at 1, 2, 3, 4, 5. So we have more momentum building, and on the weekly, we're only in the second one of these little dots, right? So my first goal is 288.88. My second one is 319.25, and a home run is 407.03. Now that could take a long time to get there, but those are my Fibonacci goals. So 288 is the first one. It's really not that far off. However, we have to get over this 265 goal, which we could just, you know, it could just fizzle out and die. Hopefully not. However, if it doesn't break through that, or until it does, what you could do is, if you did buy 50 more shares, you could start selling weekly calls. And so here are all the option chains that we have open. You could sell a call this week, right? So if I were to go out this week and be like, man, I like Tesla, but I don't think this week is going to be the week that it breaks out and goes above, you could sell an at-the-money call, right, for $3.50. Or you could go out one standard deviation, which is, 84% chance of you being profitable, right? And collect at this point, well, there's not one standard deviation out there. There's 15% and 20%. So you can collect 94 cents or $1.39. And this caps your profit. If I were to do a covered call like this, boop, and go to analyze, right? It's going to cap my profit, as you can see, this red line at $1,110. And you go, okay, well, why would I want to do that? Because this also reduces your cost basis. So the stock is right here at whatever it is, 260, right? And if the stock goes up and you hit your max profit, great. $1,116 in your pocket. If it goes down, you've reduced your cost basis by, what are we selling this for? $139. Okay. So if we took this average, that one standard deviation equals $140, right, per week, we go, okay, there's 52 weeks in the year, times 140. So 52 weeks times 140, because $1.40 equals $140, equals 7,280. Okay, great. 7,280. 24680 divided by, which is your cost basis, 7280, equals 3.39 years, right? So over 3 years, well, it takes we'll round it up to 4. So 3.4 years to bring my cost basis to 0. Or the other way of doing it would be 7280 divided by 24,680. And so your rate of return, ROI, rate on investment, equals 29%. And that is how you calculate that. So that's what a covered call would come in handy in. And I do this with T, so it's going to take me about 4 years to get my T, covered calls or to 0. So I have 500 shares. I'm going to add another 100 shares. Goal is to get up to 1,000 shares. and bring my cost basis to zero. And with AT&T, I also collect dividends. I think it's like a 13% dividend. So that's my goal. Um, and that can be a goal for you. And we can watch these Fibonacci charts. So again, my first outlook is 280.53, which I'm banging my head because I used to own September calls that are worth 435 and 263 now. And I'm banging my head because I sold them after earnings, which was what? Here? I don't know. Here? And yeah, just dumb Ryan. Dumb. So I re-entered my trade, um, and making money. So whatever. So anyways, so that's what you can do when it's gonna come up and beat its head around this 265 level. And again, these are weekly, so this is 4 days out, right? That's 11 days out. So that's next week. This is this week. So for some reason, if it goes from 265 to 270, you go, oh, geez, I lost out on my profit, right? Oh, it goes to 270. Well, actually, it goes to 280. I lost out on some capital gains, or whatever. Well, just remember that stocks could come back down, and the goal, as I always see it, is cash flow. So you reduce your cost basis. If it does reach my goal of 407.03, right? Look, that's 407.03 of free money if you had paid everything off. So that's how that works, and you just keep doing covered calls and keep reducing your cost basis. So that's one thing that I would look into. Um, and it's expensive to do that on Tesla. To have 1,000 shares. I mean, it's $26,000. So that's about all I got for you. I don't know. There's a lot of support down here. I mean, this thing support at 244.75. A lot of support. But so I would expect it to come down here though, back to 245. Um, at some point. So don't be scared if it does, because that's just the stock market. Now, if everything went to shit, um, then I mean, Tesla will probably come down with it. So here we're at with SPY, and we've had this huge, nice pullback, which has been okay. Uh, could use a bit more, but you see, we had pullback, we had rallies, a little pullback, rallies, a little pullback, and so I'm under the impression we're probably going to breach past this high, 199.06, especially if we filled this gap sooner. I feel like we're just going to be like way up again. So that's kind of Ryan Butcher's little market outlook, but my wife's always right. I'm usually always wrong, so that's about it. That's all I got.